And we're live. Beautiful. Yep. I see it perfect. Awesome. Yep. All right. So let's jump right in. Well, if you're here for my face, then. All right. Well, I suppose there's no one here, but I'll act like there is. Welcome to the live stream. Today is September 18th. It is 8:39 a.m. Eastern Standard Time. It is Thursday. We had 8:30 a.m. news. Unemployment has already been released, so we should be clear for the rest of the morning. And what Sam and I typically do on a normal day, like today, we start from our higher time frame on both of the tools that we use to execute, and we will work our way down into potentially an execution. So what I'm seeing on the week for 6E is it is a bullish week. That is true. It currently has a very long wick, but there's a lot of time left to recover that and to finish strong and to close near its highs. Especially when you drop down to your daily chart, you see that after we swept this buy side liquidity over here from, that looks like July 1st to me, we've now retraced today into a daily fair value gap, which looks absolutely wonderful in that it might be an opportunity for us to get long. I'm willing to bet if I draw a fib on the daily chart here from swing low to swing high, sure enough, we're in discount. If I flip to my 8-hour chart here, we've got our 8-hour fair value gap. And moreover, we're printing an 8-hour engulfing candle right now. I suppose there's still 80 minutes left to determine whether it'll be a bullish engulfing or whether it'll be a bearish engulfing coming out of this 8-hour fair value gap and also coming out of this 8-hour bullish bearish engulfing as well. 4-hour chart still inside of discount from low to high. We have created an inverse fair value gap up here, but we do also have this baby fair value gap that I believe we have reached down into and are currently respecting. Correct, just by a tick, but it counts nevertheless. And then down on the hour, this is where things get really fun. So not only are we in, and this will be fun for us to talk about too, Sam. Not only are we in discount on the higher time frame on the daily chart, when you dig all the way down, you can even draw a fib inside of a fib, a range inside of a range. And you'll see that we've swept liquidity on the hour. We swept sell side liquidity. We've displaced. We've had created a market structure shift, a bullish fair value gap, a inverse fair value gap. There's a breaker off to this left side as well. I mean, you have the holy grail of every single thing that you want to see on your middle time frame. Actually, you have everything that you want to see from your daily chart to your 8-hour chart to your 4-hour chart to your 1-hour chart, right? News is already cleared. It's Thursday. We're not expecting any news tomorrow. I believe either today or tomorrow we're going to have a phenomenal opportunity to trade out of this daily fair value gap and to trade out of this higher time frames discount. Thoughts, Sam? So did I. Yeah, absolutely. I hour isn't done, this day isn't done, this week isn't done. There's no reason that we shouldn't be looking to close with a fairly strong bullish move. Yep. I mean, I've seen hourly candles running with your analogy. I've seen hourly candles print for 45 minutes in one direction. We'll say bearish in this scope. I've seen an hourly candles print three 15-minute bearish candles. And that fourth candle is a bullish engulfing candle that takes out the low, puts in a new low, and then continues to go and take out every single other candle's high and closes extremely bullish. But for 45 minutes, it looked bearish. Great way to break it down, I think. And realistically, if I were someone on a non-futures account and I had the ability to pull this straight up, realistically, we could pull this straight up if we wanted to, right off the hourly chart. And what would that stop loss be, just for science? You could get it at 20, 25. You could even get it less than 25, which like I'm not going to do that because I want to see. I think it's important, something that we've talked about before, but I'll talk about it again. You can take hourly trades like this straight up, and the risk to reward here, I mean, this is great. I'm not shocked, honestly, to see someone get in this at pretty much any time now in the server. I wouldn't be surprised to see Christian find his way into this. I wouldn't be surprised if Mike found his way into this. Oh, well, there you go. 30 minutes ago, Christian was already talking about it. So, yep. I mean, this is going to be a trade that catches a lot of eyes within the server here, I think. But I think what I think is important, something that's cool to talk about, is we drop to the lower time frame for more reasons than we give ourselves credit for. And we don't often talk about it because we're making every effort to keep things as simple as we can. But kind of digging down into the weeds here for a second, the lower time frame, not only does it allow us to manage risk. What? I got a question first. Yeah. I'm gonna drop this on X, so live now with that Carter May. What do I provide people for, like, a link to join this? You pull up my YouTube or pull up the live stream and then just copy and paste the link. Yep, I got it now. Yep. I need to do the same thing as well, actually. Let me do that really quick, and then let me write this down. Lower time frame confirmation. Lovely. All right. As I was, here's something that diving into the weeds that we haven't talked about in a while, but I think it's important. And I think it's something that we should consider whenever we look to take in the future higher time frame trades on forex firms. You could take this as I have it set up right here right now. And honestly, it wouldn't be that bad because you can get a pretty tight stop loss here, and I think that's great. But what we prefer to do is dig down to the lower time frame so that we can often we make the argument that we're trying to get a better risk to reward, right? But I'm going to make a different point for why it's also important to dig down at least one more time frame and wait for some kind of confirmation. As this stands right now with 10 minutes left in this candle, with the way that we've swept this swing, right? With the way that we've dug super deep into this fair value gap, with the way this candle is currently printing, it has 10 minutes left. I think something that's really important is digging down to the lower time frame is going to actually make you more patient because you could have just taken this straight out of the 1 hour fair value gap, but the lower time frame will actually show you signatures of confirmation that you're going to wind up being correct in whatever trade it is, right? So if I'm on the 1 hour and I said, well, let me just drop down to the 15-minute, well, the first thing that jumps out to me is this bearish fair value gap that still has 9 minutes. So it's possible that we won't have a bearish fair value gap in 9 minutes, but let's say we do, right? I think it would be a better idea to wait to put in this bearish fair value gap, to wait for a body to close above it, print us an inverse fair value gap, and you can put your swing down here at this swing low, right? And be willing to lose one time. You know, you're not taking the super wide stop. You're actually almost cutting your risk in half, close enough. And you get, maybe you get a little bit worse of a fill, but you've also been more patient. Like if this continues to go the way that it currently is and it goes and sweeps this swing low, which also happens to be London low, if it goes and sweeps this low, we never got in a trade. We could have got in a trade. There's a 1 hour model right here staring you in the face, but we prefer to drop down and see that lower time frame confirmation, right? That's all we're trying to do. We're just picking areas on the higher time frame that we think are probable. Price will have to make a decision. Either it will run into our level, consolidate, manipulate, and reverse, or it will run into our level and we'll see just an absolutely beautiful V, something like this. Boom, boom. That's it. One swing low, gone. But in any situation, if we don't drop down to the higher time frame, drop down to the lower time frame, and we just jumped into this trade, we could be staring down a loss off the 1 hour chart because we didn't let the lower time frame paint us a little bit clearer of a story. We didn't dig down into the weeds and see any sign of a reversal on our lower time frame. My math says you have to reverse on a lower time frame before you ever reverse on a higher time frame. If you're expecting the 4 hour chart or the 1 hour chart to roll over, and you want in one candle, you want us to roll entirely over, right? There is going to be a 1 minute low put in that is the low of that 4 hour candle. And it's going to begin displacing in the opposite direction. And when it begins displacing in the opposite direction on the 1 minute chart, then what happens? Well, then you move up to your 5 minute chart and you see, okay, what's happening now? So your 1 minute market structure shift, fair value gap with a breaker and everything else, if you flip up to your 5 minute time frame, you're likely putting in a 5 minute inverse fair value gap. And if enough time goes and you displace, you're going to put in a 5 minute market structure shift, and then you're going to put in a 5 minute fair value gap and displacement and all of that. And then once again, if the 5 minute continues to do its thing, then the 15 minute is also going to be cooperating. And if the 15 is cooperating, then the 1 hour will. And if the 1 hour will, the 4 hour is likely to as well, right? So in the ways that you and I look at our higher time frame first and we work our way down to the point in which we become willing to execute, you also kind of have to work from the lower time frame up if you're expecting a higher time frame PD array to be respected, right?
Agreed. Agreed. And it goes back to something that we talked about 2 or 3 days ago. You really have to have it all in mind. You can't lose track of any of it. Those are the best trades that you end up taking, and that's why this game, I think, takes so much time to really learn for a retail trader. Like, there's nobody, there's nobody saying, "Hey, just stick with the plan," until you find a community, you find a trading partner, you find a group that encourages you to do so. Which is why those first 2, 3, 4 years are so hard because you identify one piece of it, but it's like playing whack-a-mole. Piece two, piece three, piece four are just that you lose them. So
Yep.
I do think I do think you could very comfortably take a buy right now. Off of there's a lot of things. I agree with everything you said, but I also think from a starting position you could get a $30 position off of one micro and wait to see what it does. We're in a 4 hour fair value gap. We're down into a 4 hour bearish engulfing or bullish engulfing inside bar, hour left. I mean, you've got a lot of things in play. I think it would be still pretty high probability, but I also agree with you. There's no problem with waiting here.
I think it would be out of character for us to pull something based off of the hourly. I think
Totally.
we've married we're going to take we are willing to go all the way down to the 1 minute chart. We're willing to take 5 minute executions. We're willing to take 15-minute executions, but I don't think I'm willing to take hourly executions. And to be fair, this hourly execution, realistically, this is a 15-minute model here. You've got two inverse fair value gaps. You've got our breaker right here. Actually, you're running into the breaker right now. Um, let me draw that
Yes,
out.
sir.
Your breaker's here. I mean, we are a tick away from bumping into that breaker. This is your
Well,
market structure shift fair value gap. Go ahead.
speaking of the 1 minute, take a look at that because another thing we've been talking about is find your liquidity, right? So where's our liquidity right now? We have a little liquidity pool that has been generating since 8:30, right? So
Yes.
theoretically, very simply, sweep this liquidity, displace out of there, boom, there's your trade. With you can get down to a 10 point stop.
Yeah, something like this, right? Boom, boom,
You're not,
boom.
you're streaming but not sharing.
I apologize. Let me
That's
do
okay.
that.
I've been following along, no problem. Because I'm looking at the same thing anyway.
Um, there we go.
And there he is, folks.
If this smokes my PC's performance, I'm pulling it, but we'll see. Um,
Yeah, you got it. Exactly what I'm
this is
looking at.
probably what you're drawing up, right? And then I think
Yep.
this is really cool that we could talk about as well is low resistance liquidity, or trend line liquidity. You can kind of call it whichever you would prefer. But I mean, look at this. You've got one, two, one, just so I can follow along. One, two, three, four, five, six levels of liquidity all stacked up in this one line here. You know, that
Mm-hmm.
that is screaming sweep me all at once in one big beautiful fashion, right? That's how I would look at it. That's how I see it. We'll see what actually happens though. And this is another
Understood.
thing that I think is important for us to talk about too that actually we probably haven't really talked about. So when you and I look to take 1 minute trades, we are often looking for a 15-minute fair value gap to trade out of. That's certainly preferred.
Mm-hmm.
And I don't believe this is the right 15-minute fair value gap to be looking for a 1 minute execution out of.
You stop screaming
Just the 15-minute fair value gap. Hang on, Mace is calling. How do I know what I can do. Oh, looks like Expo Jesse's tuned in. We'll have to figure this out for the next stream, Sam. But he texted me and said, if you're on a call talking to someone, we can't hear them. You might need to go into properties on your desktop audio and make sure it's the right output. I think he's speaking to me when he says I need to make sure that my output is correct.
There's a deep retrace. Do like that hourly open. Little gap down.
As we were saying though, while I troubleshoot this 15-minute fair value gap that we printed at 3 a.m. this morning is not one that I'm looking to take a 1-minute execution out of. On the 1-minute chart, right? And I'll take this back to when we used to trade 4-hour internal to external. Not that we don't anymore, but when that was when we were a one-trick pony and that was the only thing that we knew how to trade, we demanded that the 15-minute fair value gap that we were trading out of had to be the most recent one that was printed. We would, like in this situation here, we would want something like, well, we want to put in a swing next, and then some kind of market structure shift fair value gap here, retest, and then go target these highs, and we would be looking to trade out of this fair value gap, right?
Well, yes, we stopped streaming again.
I know.
Okay.
I'm saying if we just created right now, if we created a brand new 15-minute market structure shift fair value gap, that's the one that I would want to trade out of and not the one that we printed at 3 a.m.
Yeah, yeah, I get it. I think the problem is there's too much alignment for me. Like if we get a lower time frame market structure shift, inverted fair value gap, to me there's too much alignment not to get in this trade.
On which time frame?
I mean, 5 minute, 1 minute.
I will accept the 5-minute argument. I will not accept the 1-minute argument right now.
What's the difference in your mind?
If we're on the 1-minute executing right now, I believe we're preempting.
That's fair. That's fine. Like that, if you took just the 1 minute, okay, cool. Then I'm waiting for that thing to clear all the way up to the 855 candle, and or put in a intermediate, like a short-term swing high, sweep and go. Okay, a 5 minute inverted fair value inversion.
We
Okay,
get this 5-minute inversion, I'm all the way there. But taking a 1-minute trade right now and preempting this 5-minute inversion is really catching a knife. Do we believe our 1-minute inverse fair value gap as it stands right now is going to hold up this entire market?
yes.
Yes, I love it.
I'm gonna bottom tick this fish.
I wonder if this will bring you alive. We might. say something and see if you hear yourself in the stream.
Hang on. There's a little bit of a delay. I
Okay.
gotta get caught up. Boop. Oh boy. All right. Am I live now?
I don't know.
I don't know. Let's find out. What does your hat say? Party?
Yes, sir.
Oh, looks like Expo Jesse's you're like, oh, wait. Refresh this. There we go. I hear myself. It's
You
still
hear
tinny.
you hear yourself in the stream?
Find out. Yeah. What does your hat say? Party?
Nice. Perfect. Thank you, Jesse, if you're still here. I appreciate you.
Oh, I can't watch the stream while I watch. Oh, because it's going to throw me off. Oh, Christian did something that I like. He created a template out of his checklist. I was like, oh, that's clever. So basically, he's throwing it on every chart. All right.
He's throwing what on every chart? His template?
It's his template, but it is his checklist. You may have done the same thing too, but no need to read. Just save that as a template. Your high time frame bias, opposing liquidity, blah 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 blah.
Oh, this thing?
Yeah,
Yeah.
I thought that was clever. I liked watching him execute yesterday. He is.
Yeah, what'd you
Very,
think? You called him a technician.
he's a technician, man. It's really interesting because he's very in tune with a lot of the technical elements of it, and I appreciate it. You know,
He
so
absolutely is. And he digs down into those technical elements more than the other guys in the server, right?
yeah, that was really cool to watch.
Are you guys still wanting to go long on EU?
Yes.
Yes, but it's becoming more and more of a potentially tomorrow operation. Well, kind of at this point, we kind of have to wait and see. What we just inversed the fair value gap that we were looking to take a 5 or 15-minute execution out of, right? So now to me, it becomes we have to sweep our 2 a.m. London low and then see how we react to that level and see if we can kind of get some kind of structure built down here and then look for that classic, you know.
London low, 2 a.m.
Yes.
Yeah.
Correct. The London low just happened to print exactly at 2 a.m. But yes.
That would be just absolutely amazing. Because all right, now we've you think about the narrative that this thing's building. Everybody and their brother looks at this huge rejection. They're like, oh yeah, we're going short now. We've gone long too long. But we're just trading into daily internal.
What about your dealing range? Have you pulled that?
On multiple time frames. Which one do you want to talk about?
The one that works for you?
I don't know is awesome. Sir, draw one on the daily chart and tell us what you see. Or don't. Tell me to shove it.
Shove it.
At 50%.
It kind of depends though, because it feels to me like I'm almost manipulating this fib into painting me the picture that I actually want to see versus one that is maybe more fair of a picture of me to draw.
What's wrong
I
with
would
that
make
fib there? The daily fib, low to high. What don't you
well,
like about it?
that's not low. I don't think.
What do you like?
And this is something that we can talk about more in the future, but generally speaking, I like to run my fibs dealing range from an area in which we swept liquidity and then displaced, right? And you could say that this daily candle on Thursday, September 11th, swept liquidity, right? But it didn't sweep liquidity on the daily. It swept previous daily low. That's cool. But like the daily candle on the 27th of August, it swept a swing low. And I think that's more important than just respecting a fair value gap, right? So I would actually say that this move or the bottom of this move started on the 27th of August would be my argument. And if you pull that fib, you'll see that it drags our premium and discount into the September 15th daily fair value gap and not the September 16th daily fair value gap. I think is important to note.
I agree with that partly.
I'm just saying we can consider both, really.
I agree with that 100%. We have to keep an eye on it. But one of the things I think about that's interesting about this dealing range is if you look at that. Hang on a second, Sarah had a question. No, we're not screen sharing. I think Carter's got some.
Sam can, but I'm not going to right now.
Okay.
Yeah. But Sarah, here, go here. If you want to see what he's doing, it's got a little bit of delay, but it still functions. So if you look at the dealing range from 11 September to yesterday, what that was a dealing range, that low, that swing low is at its own discount in the previous dealing range, right? And I think what's also interesting about that little accumulation range is that whole consolidation range that we're trading in from 6 August all the way till just a couple of days ago, that we were just pinging, just creating a pin bar up at top to bottom, bottom to top of that range. And then what do we do before we displace? We run out of there and close out of there on 8 September, which creates a dealing range on 9 September to 3 September. It trades back into the discount, creates a massive new dealing range from 11 September to yesterday. Right, so it just becomes this constant repetition, like repeating low to high, premium to discount to premium, creates new range, retests that range, runs back, just over and over again. You just can't, you can't make it up. It's just over and over again.
August 6th to September 11th looks like Sarah's ideal trading conditions.
Not anymore. She read Wyckoff, and Wyckoff says, no, I don't trade consolidation.
He trades the displacement move after consolidation. I guarantee that, and I've never read the book.
That's what she discovered, right, Sarah?
Yeah.
Yeah. She doesn't want to agree with me because it's
I haven't read it thoroughly enough to come with my final statement of his.
She can't commit.
Well, I have to read more.
Felt.
One passing comment, I can't speak for the man completely. He does say he doesn't find enough risk to reward in consolidation to take trades. That's what he said so far.
Amen to that. That goes back to a million conversations that we've had. What I think is interesting here is let's say that we do want to use I'm on the hourly chart here at Thursday, September 11th at 8 a.m.
Yep.
Let's say we draw from that bottom to the top, or go with our original fib that we drew, right? You could have taken this first trade, right? Actually, I'm going to make this argument in a different way. I'm going to start on the daily chart. We're inside of a daily fair value gap. Just flat out, we're inside of a daily fair value gap. So if we think about kind of the two ways that we have to, or the two ways that MMXM himself recommends trading basically the same model, you get two options relative to time frames. You get 4 hour, 15 minute, 1 minute, and then you get day, hour, 5. What I think is optional, but he doesn't necessarily actually come out and say this, what I think is optional in both of those scenarios is the lowest time frame. I think if you wanted to, you could trade 4 hour internal to external, executing on the 15-minute chart and throwing the 1 minute away. I also believe you can trade the daily chart, executing on the 1 hour and throwing the 5 minute away, right? So if we
Agreed.
think about that and we throw that last time frame away and we think just day hour, what we currently have is, if we use the original swing that we drew and we look at this first fib we drew, if we go day hour, we're inside of discount on the daily. We're inside of a daily fair value gap as well. And if you drop down to the hour, all you're looking at right now potentially is a turtle soup inside of discount, which
Mhm.
is in our tool bag. It's in a lot of ICT traders' tool bags. And turtle soup sounds silly. So what I'll say, I'll reword it.
You meant poodle soup.
Yeah, I did. I did. No. Um, Basically it's just sweeping liquidity inside of discount. That's all it is. So it's
Yes.
we put in this London low, we made a move, and we were anticipating, if you wanted to take this first trade out of this fair value gap, you absolutely could. But you could have also just, half size and then see how we react inside of this fair value gap. I think that would have been wise. And if you end up taking this loss, I think it's important to consider where we're at on the daily time frame and be willing to get back in after sweeping this London low, after sweeping liquidity inside of discount on the higher time frame. This would
Mhm.
be an absolutely phenomenal trade. Even if you lost the first one, this
Yeah,
would still be a great trade.
I agree.
Which, another thing that I think we've done well recently is
Alright.
what?
I tapped on your live stream link. Is that you in the corner there? I'm not used to
Yes.
seeing you hoodie. I figured you always wore suits.
You thought I always wore a suit? No, just a normal guy here. I don't want to wear
Maybe.
suits. Hey, I quit my job so I didn't have to do that, huh?
Yeah. So, all right, carry on. So, can't leave her out. She gets mad at me.
No, all I was saying was, when we sweep this, this is something that we've done very well recently, just not on the hourly chart. Typically, this is the execution that you and I take on the 5 minute or on the 15, depending on the day, right?
Mhm.
So if you just imagine this is on a lower time frame, you and I would have executed on the retest of this fair value gap on the lower time frame. But what we've done really, really, really well recently is, we're going to say $100 is our 1R, right? You and I have been entering positions risking only 40, 50, 60 bucks on the initial retest of this fair value gap. And then if we see what we want to see and the market respects our area of interest on the lower time frame, then we find a way to manage ourselves into a better position. We average
Right.
in, we double down, right? We get more risk on the table once we see that kind of rejection that we want to see the first time around. And so, what that's done for us is, it's made our losers decrease in size.
Mm.
Because if we get in with 50 bucks in our original position, and you see exactly what we're seeing right now, and the market says, I'm absolutely not respecting this fair value gap, and it just nukes our stop loss, who cares about losing 40, 50 bucks? That's half a position for us. We never even got in full size. Whereas
Right.
we used to, if you kind of went back in time a year ago today, we would be entering every single trade from the very beginning with as much size as we wanted to get on, and we would say, I'm not touching this. It's either going to go where I want it to, or it's going to stop me out. I'm not entering with half. I'm not doubling down later. I'm not adding. I'm not subtracting. I'm not doing anything. It is what it is from the moment we got into it. And
Yeah.
now we've kind of switched that around in a way such that we can keep our losers small, get in with a smaller position, let the market show its hand a little bit. Maybe we get another inverse fair value gap. Maybe we create another break of structure fair value gap. Maybe we retest it and then we can find our add in there. And then get in full size, and allows us to really, really, really get great risk to reward without ever even having to risk full size.
Yeah. Yeah, I agree. I'll be right back. I gotta grab my phone.
Yeah, I'm fixing to make another coffee here in a second. What's this? Breaker. Ooh. Why is that what that is? Cell stops. There we go. That's the one. In fact, yes. Perfect. I'm going to throw another coffee on real quick.
I think this is. Are you back?
He's Spence,
I know.
just like him.
I know. I heard him.
News today,
Already done.
have you guys looked at NQ?
Yeah. It's already done. Although does look like it's pulling back. But
It's not even on 30, how can it be done?
look at that move. Like it already took out just a massive amount of liquidity. So where are you gonna trade out of? Like you might want to pull it, and that's fine. But since open yesterday, we've already moved what, 300 points. I mean, 9 minutes, you get an open. We don't reverse out of consolidation. You could pretty comfortably play that because
Check out my sign.
what?
You can't really see what it says, but it's back there.
What sign? Oh yeah,
Sign
yeah.
behind me.
No, I like it. What's it? Carter's Cabana.
Yeah.
Nice.
Can you actually read that?
Yeah, man. I like that.
That's hilarious. I don't think I'm gonna keep it on, but
Why not? I like it.
all right, we'll rock with it for the day. Why not? What do we got to lose? You twist my arm.
You're so funny. Sarah's asking about NQ. I think
I'm not trading in queue today. Period.
I
No,
agree with
I don't know.
you,
Let me
but
look
at
at
the
it.
same time, if we look at this, just take a look at it. It is an interesting bit of price action, right? We moved 300 points already. We ran up all the way through London. Thank you guys for the price, stealing our opportunity to move it, assholes. Eurotrash can go do Eurotrash stuff, and then but now it's trading down into a discount.
Correct.
Hourly range.
Yep.
You get another decent push in your 9:30 open, and I think you could viably trade this back to the high again.
Yeah.
Just
I don't hate anything about it. I think it would be really, really nice to see. I mean, you got to draw your fib from low to high, right? We always do.
Yeah. Jeez.
You draw low to high. I mean, discount is deep. Discount is far away. Discount is what? We're 24,680 right now, and discount's at 24,500. So we're 180 points away from discount, and we have both London and Asia low between us. I don't know. I think if I'm Sarah and I want to get aggressive on NQ, You could wait on this 15-minute fair value gap to inverse and then take a 1-minute setup.
Why would she wait? You're so stupid.
Yeah, what is there to wait on? Scared money don't make money, right? That's what they say in the business.
Just go.
Yeah.
Not like it matters, but like I would have at least, Sarah, waited for that 5 minute to invert. Right? Like we are 6 minutes from open. But
If you manipulate your dealing range from London low to the 8:30 high news high, we're actually inside of discount right now.
I don't think that's manipulated. That's a viable dealing range. It's also running into hourly order block, hourly displacement, fair value gap. Right? There's a lot going for that trade. I just think she should wait for open. That's just my opinion.
$63 on paper trading.
On paper trading, and this is why Wyckoff says
Don't pay.
don't pay.
Just got to prove the man right, you know?
Yeah, right.
If I were paper trading, I would never not be in a position. It would be so unproductive.
Like Sarah.
Hey, across all accounts.
Sheesh. Oh well. Hey Sarah, I did the write up for Haggai like you suggested. We need to post it on Telegram.
No, we actually have. Thank you.
Somebody needs to post it. I threw my Greek books in my bag too, so in the afternoon, if we have time, I'll do Greek and Latin. Fun. I should probably
This might very quickly wind up being log right out.
Why? I mean, if it sweeps those sell stops, that's even more liquidity. I don't. It goes back to something that I think we've locked in on is let's just wait for the middle time frame to make its mind up, right? Let's say we.
Well, that's what I'm saying. Agreed.
Okay, but let's say we sweep this low.
Sure.
And okay, we've run through a bullish engulfing. Kind of who cares? We're looking at the 15. Oh, what's the hour, Sam? Hang on.
Well, I would even go up. I would go look at the 8-hour, and then I would drop to the 4-hour. Is what I was going to build an argument out of.
Okay, so you bearish engulf.
And respect a bearish PD array after another that was created off of sweeping buy side liquidity and bearish engulfing, right?
But that also trades us into a 4-hour fair value gap, 8-hour fair value gap.
It does. But we have to consider how long it takes for price to generate and then deliver a full reversal, right? We could end up consolidating all morning and the run could be in the afternoon and we won't even be sitting in our chairs for it.
Yeah, I was talking to the guy that I talked to at church. I'm actually going to probably spend some time with him here in the next couple of weeks, just talking through like what he does. And he's like, I'll sit down with you.
Pete?
Yeah. And he's actually been doing this for a couple of years and he's actually making stay afloat. But I don't know how he trades. But I asked him yesterday, I was like, so do you watch charts all day? He's like, yeah. And I'm sitting there like, why? Like what in the afternoon happens that you're like willing to make money on? And is it worth it? I just don't see the value in it, but that's me.
Depends on the kind of trader you are.
Yeah.
If Sarah had an infinite amount of money and wanted to, she could sit there every single day and find a reason to be in a 1-minute trade all day long.
She would too. Like, I don't know anybody whose focus is better than hers. Nobody.
Right. So if that's the kind of trader that she wants to be and she wants to sit there and probably stroke out by the age of 52 from heart palpitations in those large-sized 1-minute trades, then...
Large-sized one. Yeah, but she doesn't really care. Like...
Well, that's an advantage, not a disadvantage.
Yeah, she's gonna out-trade me eventually. I believe it. Once she gets some discipline.
So I'm reading.
That's why I'm reading. That's what she says.
Do it when I have a reason.
Mm. You'll have some discipline when you have a reason.
Yeah.
Yeah.
That's how
Okay.
it works.
Till then, I'm making his money. That's what our
Once I'm a 450-pound whale, I'll have some discipline to go to the gym.
Yeah. That's it. That's the way.
Yep.
Jeez. Oh man. Freaking Kyle.
What?
He already announced I'm not taking any more trades today, but I'll join you guys on stream.
He's taking trades.
You know what's crazy is if he saw something that was staring him down in the face, he'll be on top of it.
After he turns off his camera.
Oh,
Let's go watch NQ open because 6E's boring.
Cheer for me.
I always cheer for you, woman.
There's a sweep of liquidity. There's a bullish engulfing all in 8 seconds. Let's see. Draw this fib.
All right. Here we go.
Sarah, I'm not going to flip over right now, but I'm going to say this and then I'm going to flip over. I'm willing to bet that this low on the 15-minute chart from 9 o'clock has been swept on ES, but has not been swept on NQ. Survey says.
You are correct.
Yep. I got that. I never looked at ES today. It's all on film. You can't make that up. Now watch that level hold. If I were long right now, my stop loss is at the low right there. That 9 o'clock low. Unbelievable.
How much does that cost me? Oh, geez. I need bigger accounts.
So this is something we should consider talking about. Maybe not today, but in the future. You said a couple weeks ago when I was bringing up, yeah, that's a 2.2 if it delivers. You said a few weeks ago when I brought up SMTs that you don't really pay attention to them, haven't found them all that valuable, so on and so forth. And that's fair because 1 minute SMTs, who really cares? But I think where SMTs in those divergences could provide value to you and I and just most traders in general is they're important on your higher time frame and they should be considered. But I think where they're most valuable is your middle time frame, right? So a good example right now, maybe I haven't looked at this either, so I'm going off the cuff here, but let's see. So this swing low, this London low right here, I think where SMTs are important is on your middle time frame. Most important is on your middle time frame. And it could be used as a confluence when you go to dig on your lower time frame and execute. It could be used as an area in which you place your stop loss, right? So 6E right now has swept that 1 hour, 2 o'clock low. But if I flip
Yeah.
over to 6B and I see that 6B hasn't swept that, it has. But if it hadn't, and there was an SMT there, I think where you can find value in those divergences is on the middle time frame, not as a requirement, but just as a confluence in something that you look for to see, oh, that's just something additionally that I have going for me. It's one of those from probably a year ago. I remember walking around at work and you said, Sarah had an interesting thought. She said, you gotta get the bones right, get the base of your framework and your model and everything correct. And once you have that right, then you need to focus on what she called easy plus ones to
Hmm.
build yourself further conviction and further confluence in your idea. And I think that is exactly what an SMT is. It's not a requirement. It's not something you and I have to get into a trade. But if our middle time frame in this hourly London low was swept on one and not swept on the other, and we get a reversal model, what a great place to put your stop, right? At an
I don't
area
know.
in which you're expecting not to be revisited. This becomes increasingly more interesting. The plot thickens.
He's looking at pound. I'm gonna hop over.
Yeah, hop over. I'm going to stick here.
All right.
At this point, you're watching for this 15-minute inverse fair value gap, I think. And you're watching the way in which this 1 hour closes. And important as well, I believe you need to be watching the way this 4 hour closes. Because we are not currently printing a 4 hour bullish fair value gap, which is fine, not a big deal. But when you see a break of structure like this, when you see the market drive down, when you see this liquidity swept, right? The swing low was swept. We swept the low of the previous 4 hour. We swept this swing low as well. We respected this 4 hour imbalance, right? When you pair all of that together, and then you consider this buy side liquidity here, an area in which, should we displace above it as we have, you'd call this a break of structure. And what I would want to see typically when we break structure is I would really prefer to see continued displacement. And you might be asking, well, how do you know that you're continuing to displace? And my answer very simply is you're still leaving behind fair value gaps that we're going to need to go back and retest and then find more support and then continue our move, right? If you flip to the 1 hour, fortunately, it paints you a much clearer picture, right? We sweep this level, and what do we have? Well, when you get your break of structure, not only did you break structure here, you also continued to break over here as well. You get both your fair value gaps. And then what do you see? Well, you see a swing low to a swing high. You can draw your fib here to here. Boom. So you've got your daily, which you believe is bullish. You believe New York will continue what we've done overnight. You've got your hourly. You've manipulated sell stops, right? You've manipulated down into these bullish fair value gaps. You could look down into the 15-minute, where currently, as it stands, there is an SMT here between NQ and ES, being that ES has swept the low and NQ has failed to do so. right? And so, thus, you would expect this SMT to hold. If you were bullish right now, you're watching this low to hold. If that low does not hold, you're out of this, you're out of a position. You're not in a position anymore. Because if this low doesn't hold, then think in 5 minutes, right? In 5 minutes, if this continues to move lower, you're going to print a bearish engulfing candle potentially. You're going to continue breaking structure, right? We swept buy side liquidity up here. Here's your swing low. This is a market structure shift, bearish market structure shift on the 15-minute chart. You've got a breaker. You've got a fair value gap. You've got an inverse fair value gap that we also reached up here and tested, right? So just thinking, if I were a 1-minute trader and I were using the 15-minute as potentially my middle time frame or maybe even my higher time frame, I'm currently seeing this as I want to get short. I want to target this SMT. I want to target this area that ES has swept that NQ hasn't. And after that, I would be looking to go out and get these London lows. I would be sensitive to how we react to the London lows. And then I would potentially, depending on this reaction, be looking for us to go sweep the Asia lows. I'm not going to be the guy that trades counter trend right now. I'm not going to take shorts. Just simply analyzing price action and what I see. And there you have it. So what would have been your execution model here potentially if you wanted to get short, right? And my answer is there really hasn't been one. Now we're retesting our midnight opening price. Evidently, we didn't like midnight open. But now we failed to leave an SMT. So if I just switch this up here really quick. And come over here and do this. Now you have the NASDAQ on the left and you have the S&P on the right. Once again, we have another SMT. So if I were looking to get long right now on the NASDAQ, this is what's important. You have your London low here at 230. Boom. And then over here as well, you have your London low that was printed at 230 on ES. Well, you might ask yourself, you might ask me, what's the difference? Well, my math says over on the right side, ES has swept London low. Meanwhile, what's NQ done? Well, NQ at its closest point was 50 points away from sweeping London low, right? So if I got long on NQ right now, I absolutely do not want us to come find this low. Will we? Yeah, potentially. But that's not my trade. My trade would be sweep these lows, sweep Asia low as well, sweep London low. And then I would be looking for us to displace potentially on the 5-minute chart. And I would be looking to take a reversal back to current day's high. Oh boy. Is this that daily fair value gap? Yeah, it is. So now we have filled in the entire daily fair value gap as well. Wow. Now I think something that's important to consider, right? So what I was originally looking at coming into excuse me, coming into this day, what we were potentially hoping to see was a sweep of previous days low. We wanted to see us sweep the Wednesday low, right? We wanted to see us dip into this bullish fair value gap. And if I had it my way, my model today would have been I would have wanted to see this print a bullish engulfing candle. So what we would have done is swept previous daily low, and then I would have been looking for previous daily high to be delivered all in the same day. Um, Not super probabilistic that that would happen, but it's happened before many of times, and it is possible and it is reasonable to expect that that is a possibility in a given day, right? But now you have to consider the time of day. It's 9:45 in the morning. New York has just opened. We aren't respecting this first daily fair value gap. We filled it entirely in. You have your second daily fair value gap here as well that we've also filled entirely in and more. And there is just absolutely no way possible that you could go from here to here. I would be expecting from where we are right now to the high, I would be expecting a 1.45% move in the euro. That is not going to happen today, pending some serious news drops, pending a Trump tweet, pending a Jerome Powell says something in an interesting press conference, pending something of that sort. There is absolutely no way I can expect us to inverse this entire move today. No chance. If I were to get long, my target would be this high. And even then, quite honestly, I believe that's a stretch as well. We would really, really, really need to get on our horse starting, well, now. And you don't even have relative equal highs, right? You got all the sell side liquidity we've swept. Getting a reaction out of this lower daily fair value gap that's interesting. But this probably isn't a trade. Probably isn't a trade today, honestly. As bad as I want there to be, as much as I was looking forward to potentially getting the opportunity to take an execution, I don't think it's going to happen. And the way I see it, you do not want to see a 4-hour bullish engulfing candle get entirely inversed like this. You do not want to see a 4-hour dip into a 4-hour bullish fair value gap and create a bullish engulfing candle and then follow it up by a bearish engulfing candle. Certainly not on your middle time frame or higher time frame, whatever you call the 4-hour. I would call it one of my middle time frames. This is not what you want to see. Now, Sam and I spoke about this earlier. I'll rehash it out again. In the next 10 minutes, we could print one big fat 15-minute bullish candle like we currently are kind of doing at the moment. If this continues, if we get back up here, right, this would still wind up being a fairly decent 4-hour close, right? We didn't take out previous 4-hour low. If this leaves a long wick on the 1 hour, that's what we call a swing failure pattern. If the hour delivers a swing failure pattern, I would consider, and the 4-hour delivers a bullish close, then that would be enough for me to consider dropping to the lower time frames and potentially searching for an execution model, right? If you were a big aggressive guy, you could very easily take this 5-minute inverse fair value gap should it decide to print. I apologize. Ooh. Now, this is something that's also interesting to talk about. Well, it kind of does have a wick. Yeah, it does. Yeah. Let's talk about daily bullish engulfing candles. And I'll use 6E as that's the one that I was just referring to a moment ago, right? And I'm just going to quickly run through price and then I'll show you exactly what I'm referring to. In fact, here's an example from just last week. I believe this was Thursday of last week. This is exactly what I was expecting to pan out today and exactly what I was looking for. What do? We put in a swing low. We displace on the daily. We leave a daily fair value gap. We come down into the daily fair value gap and we retest the daily fair value gap. Then what? Right here, you get a retest of that fair value gap. You get a drive down deep into it. You fill it all the way in, and then you deliver a daily bullish engulfing candle, right? This candle here is exactly what I was expecting over here, right? That is exactly what I was looking for. And you can kind of see it over and over and over and over and over again, right? Daily engulfing candles happen all the time. I believe this candle here is a daily engulfing candle. I believe this candle here is a daily bearish engulfing. This candle here is a daily bullish engulfing candle. This candle here is a daily bullish engulfing candle. It swept these equal lows. We had equal lows on the daily chart. It swept the equal lows. It displaced, created a bullish engulfing candle, and then created an inverse fair value gap, right? Up here as well. We print a swing high, put in a low. We take out previous day's high. We don't take out this buy side liquidity, but we take out previous day's high. And then we get a massive daily bearish engulfing candle. Over here again, what do you have? I bet you, I'm willing to bet you lunch. If I draw a fib from here to here, you're going to see we have daily fair value gaps inside of discount, right? Not only do we have daily fair value gaps inside of discount, you have this candle here on July 16th that retested both of these fair value gaps, and then we printed a daily bullish engulfing candle. Here's a daily bearish engulfing. Here's a daily bullish engulfing, right? Where did we get this daily bullish engulfing candle out of? We got it out of a daily fair value gap. Important, very important. This exact model is what I was looking to see today, right here, once again. And I could probably switch this up if I wanted to paint this as a little bit clearer of a picture. If I wanted to draw it from this low to this high, you can see we came inside of discount of this little range here. We retest the daily fair value gap, and then we print a daily bullish engulfing candle out of the daily fair value gap. It happens pretty often. I mean, on average, it looks like maybe once a month, once or twice a month, potentially, we get engulfing candles, sometimes more, sometimes less, right? Here you have it again, daily bullish engulfing candle. And the next day was kind of an accumulation day. So coming into that third day, what are you expecting? You're expecting to see us deliver more bullish price. Rinse and repeat, so on and so forth. You can find millions of them. Over here, once again, what do you have? You have a daily fair value gap. What do? We retrace down into it. Well, what happens after that? Well, you print a daily bullish engulfing candle out of the daily fair value gap over and over and over and over and over and over and over again. And it happens on the lower time frames too. Happens on every time frame, right? Price is fractal. I believe price is fractal. You can come to your own interpretation. Figure out what you believe is true and what's not. This could be a really interesting close on the 1 hour here. So yes, look like swept both Asia and London. So I would expect Asia and London to hold on the NASDAQ. Or maybe you don't. Or maybe you are bearish and that's the low you're targeting. Maybe you're targeting London or Asia low. That trade's not for me, but certainly is available, right? Maybe the 5 minutes your higher time frame. It's not mine. Maybe it's yours. But you want to see this 5 minute inverse fair value gap. You'd expect this to be your high resistance liquidity. You'd expect this low to hold for the rest of the day or until you're done with your trade or until maybe we take your TP here at the 935 higher, the one at 830. The Newswick, actually. I would really enjoy getting to target this Newswick. I'd really. Ooh, what a candle. Little things like that. This is really when the market shows its hand, right? And I won't take this trade, but say you did. You could get a 1 to almost 2.5, risking only $70. But the next 2 minutes is very important. Print an inside, expect the next one to continue displacing, right? Wow. This might be a 5-minute bullish engulfing. Unbelievable. You did get a 5-minute inverse fair value gap. Now it's officially a 5-minute inverse fair value gap. So it's gonna restart here. 4-hour, long wick. I would expect the 4-hour to go retest these buy stops before it does anything else, right? 1 hour, long wick. In fact, that's a bullish close, right? 15-minute didn't print a bullish engulfing, but printed what we would call in the business a swing failure pattern. 5-minute was attempting to print a 5-minute bullish engulfing candle, although it didn't. It came close. Now you're seeing us really get on our horse here. Pending this close in 4 minutes here, this candle would become a bullish breaker. You have an order block here. And you have your target being these buy stops above us. Ugh. What's the weather saying today? Nice day to go throw some frisbees. You don't like how fast we just took previous hourly high, that's for sure. You never, ever, 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 ever want to see that happen, right? Because you want to think power of 3. You want to think open in a bullish scenario. You would want to think open, low, high, close, right? That's kind of how you would want to see it. Open, low, and you want to get in down here, trade it up to here, high, close, right? You, in a bullish scenario, don't want to see us open, go higher, and then lower, and then think we're going to go higher again and then close, right? This looks way worse in my eyes. Let me restart here. Don't give me a terrible fill.
Order submitted.
Perfectly fine. Place my sell stop here. This is where I'm going to place my stop loss.
Order submitted.
And then really just target a 2-to-1 here on this inverse fair value gap setup. I'm not looking to get I'm really not looking to get a whole
Order
lot out
submitted.
of this. This is what I would consider a pretty high risk trade here.
Order filled.
So what do I look to do when I believe a position is a fairly high risk position, right? What I'm doing right now is effectively attempting to catch what I would consider a falling knife, right? But as we spoke about previously, a reversal all starts on the lower time frame, right? There was a low put in over here on the 1-minute chart. There was a market structure shift put in on the 1-minute chart, right? And then when you flip over to your 5-minute, what are you seeing right now? Well, on the 5-minute, you're seeing a inverse fair value gap. That's the current execution model that I have taken today. Here in 7 minutes, potentially. Here in a little bit, maybe we'll get the opportunity to see a 15-minute inverse fair value gap. Likely won't happen within this candle, but could potentially happen maybe in the next one or maybe in the one after that, right? And so when we make a big move like this and we sweep so much liquidity off to the left, even if this isn't going to inverse this whole leg, right? We can expect it a lot of time to retrace back into discount. Well, if we retrace back into discount, that's pretty much where my take profit is, right? I don't need to catch this whole entire big fat move all the way back up to this high. It would be cool if I did because the risk to reward would be pretty nice, but that's not what I'm here to do, right? I want to get my piece of the pie. And I want to try to get out really as quickly as possible the majority of the time. Flip over to NQ, see how this is panning out. Yeah. About how I expected it would. So now what do you have? You have a breaker. You have a market structure shift. You have a fair value gap. Got a lot of interesting things here. So maybe you could potentially be looking to find a trade out of that area. Let me jump over here.
Order filled. Order filled.
And do that. All right. Man, what a trade this is so far, huh? Jeez. What would the risk to reward have been on this? See, that's where NQ just gets you in trouble, man. NQ forces you into a $112 position there. And you could only squeeze out 1.2, it looks like. That's tough, man. What I would prefer to see at this point, ideally, is, let me get some kind of a retrace, right? Without sweeping this high. Maybe we put in equal highs, relative equal highs. This turns around, retests a fair value gap, does something cool, right? That's what I would hope to see. Gotta use the restroom one moment. All right. Right. So I'll cover another thing that I often do when I'm in a position. Just for me personally, I'm not the world's most diligent journaler. Um, so one thing that helps me to be consistent in my journaling is I do it in the moment instead of after the fact. Whenever I get into a trade. Um, so I'll show you what that looks like now. I kind of just talk myself through it. Talk through what I'm seeing in the moment, right? So let's talk about what I'm seeing. I'm seeing a massive bearish drive, swept tons of sell side liquidity, reached into more bullish fair value gaps than you can count on basically every single time frame, right? And the model that I took a 5-minute inverse fair value gap, $50 worth of risk on the table, take profit is at arbitrarily just 2R for a $100 win on each account. And then oh, well, that's definitely not what I wanted to do. This is what I want to do. And then grab a snip of the trade. And go ahead and grab that and attach it into a journal. Simple, easy, effective. As you can see, you starting to ride in our favor. Beautiful. It's what we love to see. I find, well, my trading partner and I find oftentimes these days, once we make an execution, we look to move up in time frames, not down, right? So in this scope, what I'm hoping to see at this point in time is a 15-minute inverse fair value gap. I want to close above in 10 minutes. Ideally, if I had it my way, I'd love to close above this bearish fair value gap And I would also love to leave a bullish fair value gap in place of it, right? So if we were to create an inverse and leave a bullish fair value gap and then get some kind of a retrace into the bullish fair value gap, at that point I could look to add into my trade. Maybe I could even look to tighten up my stop to the 10 o'clock, 15-minute low, right? There's options. But in any case, I'm only in $50 worth of risk. So I don't quite honestly really care what happens at this point, right? I just have to sit here and let the probabilities work themselves out. Now, I'll say this much. I'm slightly disappointed in myself for missing this NQ. I think this was a very catchable trade that I probably should have had a hold on, right? You get your sweep of sell side liquidity here. You get your displacement. You get your market structure shift. You also created a breaker, which we ended up coming and retesting on the 1-minute chart as well. Here's your breaker. There's your market structure shift fair value gap, right? And that would have been my area of interest in which I would have been looking to execute. You could have taken it on just the original retest, and you probably could have got this. I mean, if you want to be safe, you really got to throw your stop at the swing low, but I'd probably get a little bit more aggressive in the interest of risk to reward. And then obviously you would be targeting that previous 4-hour high up here, right? I had it drawn out perfectly earlier. You can rewind the stream and see what I had marked up, but this was pretty much the trade, right? You could have even got in, let's say you want to be an inverse fair value gap trader, right? In this situation, you were a market structure shift fair value gap retest trader. But let's say that that's not your style. Let's say you watch Dodgy's DD on Twitter too much and you believe you should be an inverse fair value gap demon because that's what he tells everyone is the right thing to do, right? You on the close of this candle at 9:49, you could have taken this trade, and what he typically does is throws his stop just a couple points arbitrarily beneath the inverse fair value gap that he's looking to hold. And oftentimes he gets in a way such that there will be a bullish fair value gap also separating you. So this would have potentially been his trade. I'm sure that he'll likely throw his trade out there on the old Twitter here later today. And then you just target buy side liquidity, right? So you could have got in this trade in more ways than one. You really don't have to overcomplicate trading at all. 1,000 ways to skin a cat, 1,000 ways to make money, a million different ways to execute the same trade, and you can kind of pick how you want to do it. Another thing I think if you were long in this situation that you would have really enjoyed inside of this retrace, and another thing I haven't yet talked about is you can draw a fib low to high, right? From this low to this swing high, and you see we retraced perfectly back into discount. Absolutely beautiful. You click over here, what do you end up confirming at 9:55? You end up confirming a 5-minute inverse fair value gap. What do you confirm at 10 o'clock? You end up confirming this as a breaker. You end up confirming this as a market structure shift. You end up with another inverse fair value gap over here, right? What do you end up with at 10:05? You end up with another inverse fair value gap. What do you get at 10:15? Well, at 10:15, we swept our buy stops. We swept liquidity. If you didn't catch the move, you're done. What are you going to do now? Chase all-time highs? Man, shut your computer off. Like, if you didn't already catch this move long, it's time to call it a day and pray tomorrow delivers you some better opportunity, right? That's it. Everything at this point's a gamble. We're at all-time highs. What are you going to do? Chase all-time highs? You could. That's not for me. So hopefully some of that breakdown makes a little bit of sense to you, and it's just some lower time frame analysis, right? You can rewind the stream and watch the bit back where I talked about SMTs and their importance as well. I covered how London low and Asia low, have both gone untouched today on NQ, right? But if you flip over to ES, well, what do you see? You're going to see that London low is swept. You're going to see that Asia low is swept. You're going to see that we created a swing failure pattern, right? You're going to see on the hour that we gave a nice, decent close. NQ gave us a better one, but this is a good close, right? You're going to see on the 15-minute chart here at 10 o'clock that we confirmed an inverse fair value gap. You're also going to see another SMT, right? Where's NQ at right now? Flip back over to NQ. What are you going to see? Well, NQ's at all-time highs. Duh. Where's ES? Not. So it makes sense, right? You have to use these things contextually, arbitrarily using them in without the context drives your probability of success down tenfold. So you could have used this SMT and these lows holding on NQ as confluence that, hey, this is probably going to be a bullish move, right? You could use the SMT now, here and now as well. If this closes in 4 minutes and we re-deliver back into this 15-minute fair value gap on ES, right? We get a 15-minute bullish fair value gap. We get a 15-minute inverse fair value gap. You dig down to your 5-minute chart. What do you get on your 5-minute chart? Well, you have a market structure shift. You've got a breaker down here. You've got bullish fair value gaps. You've got inverse fair value gaps. You've got the whole 9 freaking yards right here, right? And if NQ has gone and has swept those highs, it's reasonable of you to assume, mind you, take a look at this. You think the market does things randomly? I want what you're smoking. Look at this. Your 510 high is equal highs with your 550 high. Boom. Boom. Totally random, right? Market left it there just for no reason. It doesn't matter. We're not going to go take that. No way. Equal highs on the 15-minute. What a terrible draw on liquidity. You're dreaming, man. We're going to go sweep those highs. The question is, what are we going to do between now and then, right? Are we going to draw this fib from low to high? Are we going to retrace back in a discount? Is this 15-minute going to retest this fair value gap? Is it going to give us a deep dig into that gap? Is it going to just touch this inverse and flip around, right? That's where the money is made in those decisions. Everyone sees these equal highs, I would hope. If you didn't see these equal highs, I'd recommend you go back and study this because this draw on liquidity is going to get hit today. Guaranteed. Guaranteed. The problem is you have to find your way into it and you have to manage your way into it, right? Here again, what do you have over here? You have a bearish fair value gap. What did we do at 1024? We closed above it. The body closed above it. That's an inverse fair value gap. If you wanted to take a very aggressive trade, boom, there it is. Put your stop here. Target this high. Get yourself a little 3-to-1, 1-to-3, whatever. Trading is as hard as you make it, right? Let's go check back in over here. Not exactly delivering us what we want to see, but in any situation, this looks to me like we're going to have a 15-minute fair value gap. I'm not the world's most experienced guy relative to speaking about balanced price ranges, but what I do understand about them is typically a BPR is denoted by bullish fair value gaps overlapping with bearish fair value gaps and vice versa, right? Again, not well versed in BPRs, and I never talk about them ever, but hopefully what we can expect to see here in 40 seconds and what I would really enjoy seeing is a retest of this fair value gap. And if we get a retest of that fair value gap, well, maybe I'll be down on my 1-minute chart looking for opportunities to add into this trade. That would be pretty nice, I believe. But so far, there's just nothing to do here. This is where we as traders have to be patient, remain emotionless, not care what this number says. The number's useless. As I've gone about my journey, I've come to understand more so in recent times than in others that fortunately I've had the opportunity to listen to some pretty great mentors, and most of their messages remain to be the same. You can't care about the money. The money is great. The money is a byproduct of your continued study, of your relentless effort to never give up, right? But if you're out here and this number here is the sole reason you're doing it, I challenge you to find a different reason, find a new why. Speaking as someone who's been doing this for almost 5 years now, or for just over 5 years, right? Man, when those times got hard, you think the idea of money was what kept me here? I mean, it's certainly a part of it, right? It's important. It's why a lot of people originally get into this game, man. Oh, you can make money quick? Really? You can make money quick after 2 to 3 years of losing every day? Yeah. Can you handle losing 2 to 3 for 2 to 3 years every day? Can you handle that? It sucks, and there's nothing fun about it. But what is on the other side of that? What's on the other side of all that loss, all that heartbreak, all the pain? If you have a trading partner, you guys are going to collide sometimes. I know that in my scope, my trading partner tends to be more patient than I am, and in my young age and aggressiveness tend to get excited and want to execute a little more aggressively, right? But what that gives me is the opportunity to balance myself out, and for my trading partner Sam to balance himself out in this nice big one happy medium. Do you have a trading partner? You don't need one to be successful, but I certainly believe it reduces the amount of time necessary to find success. Can you watch a trade in profits go against you and still be willing to add in? Can I watch this trade go for half R, 0.7 R, 0.25 R? I don't know, whatever, right? Can I watch this run in my favor and then still be willing to sit here, watch it turn around on me, retest this fair value gap? I see a little bit of drawdown, right? Would you still be willing to add in? I will be. I'll be down on my lower time frame, waiting to add in, waiting to manage my position, right? Can you handle that? It's hard. It's hard, but it gets easier with repetition, with your journal, right? Again, I'm not the world's greatest journaler. You can see I started this journal back in August, right? And I have started many different journals in my day, and every once in a while they fizzle out, and then I'll have to kind of go back and reassess all over again. I'm not perfect. I fail to do things. I'll tell you one thing I haven't failed at in recent times, and that's following my system. The system that's taken years to build. We sit here every day and we wait on it. We wait on a chance to execute. If we don't get one, fine, move on. Whatever, go touch grass. I can't not wait to go touch grass when I'm done here. And the plot thickens. We swept that high, but we didn't go get the other one, right? Will we? It's of my belief we will. I'm gonna soak up the sun. I just talked about it, and it's gonna happen. You're gonna get that chance I was just referring to. There you go. Can you watch it go against you and be willing to still execute? I can. And I will. Gonna soak up the sun. Okay. What I just typed out to my trading partner is I'm watching how the 1 minute chart here reacts inside of this 15-minute bullish fair value gap. As I've covered earlier, I'm only in with about $50 worth of risk on the table, which is about half a position for me. And if I see what I would prefer to see on this 1 minute chart, then I will be okay with putting a little bit more risk on the table. Da 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 do do. Gonna soak up the sun. 1 minute. We're back. Yes.
Order submitted.
I don't have much to say about this one. It'll do what it does.
Yep.
I am. So this is kind of back to my point earlier this week. Like I'm gonna wait for it to put some type of structure in, right? I do want to pull stops on the hour, just follow that up. But if like I'd like to get an ad in, definitely. But
I
I'm not
already
gonna.
got one in.
Nice.
Look at where I got it too. I got it here right on this right on break even. Right on break even. It was lovely.
Yeah.
And I'm
Yeah.
going to get another one now.
Order submitted.
Thank you, love. I'm going to drag my stops. And I can actually even drag my take profit a little closer. Make sure we're copying. We are. Lovely. And I have $70 on the table. So we'll take that.
The thing I
Not-
don't like about any of this is like how much we've already traveled in the day. Like it's just like, man, what is the likelihood here? It's a little frustrating because it goes back to the whole timing.
Well, no.
conversation.
You don't get to ask those questions now.
I agree. And I think this is a reasonable, cut. But it's just like, man.
Yeah, because if it were up to me, if you didn't get stolen from me again for literally no purpose at all, we would have never been in this garbage and we would have slapped a banger over on NQ. But we live as a team and we die as a team. So here we are in this trash M6 trade, and we could have already been out for a beautiful trade over here on NQ. And now I'm sitting here praying that 6E is actually going to end up making a move today, and it's probably just not going to, and we're going to get clipped for a loss and be upset that we didn't trade the pair that we should have traded. That's where I'm going to land today, unfortunately.
You say it like that.
Well, that's a realistic approach. That is exactly what's happened. And we maybe, I don't know if I'll be willing or not, but I think this is just too potent of a draw for ES to leave behind at this point, and it just even helped my case, right? You have 15-minute exact equal highs off to the left that were left behind today. On your 15-minute chart, you have a massive inverse fair value gap that you're now trading back into. You have a massive bullish fair value gap that you're now trading into. And not only do you have those exact equal highs at 10:30, the 10:30 15-minute candle is also put in another high that's stacked in up there as well. So now you have two equal highs with another relative equal high all stacked up, and you might just receive a perfect, beautiful retrace to equilibrium here.
So why not
and
just
could potentially get a trade out of it.
6E, flip over there. So why not?
Because I'm not confident in ES either.
Yeah.
Because now you have to consider the time of day for ES. You have to consider there's 6 minutes left in this hourly candle. We are leaving a massive wick right now. We're respecting. This is two bearish inverse fair value gaps as well, right? With a bearish, just a bearish fair value gap. So pending how this closes in the next 5 minutes and 40 seconds, that's no longer a good trade either. But what was a good trade was this NQ, I think. I mean, I don't know, this kind of comes back to market conditions, really. Like, you and I at this point are just so trained. I don't really know how to word it. Like, we used to sit here and go, you know what? We're going to wait on that 9:30 manipulation because we believe that's what's going to happen. We almost always manipulate on 9:30. And then we would be sitting there thinking, how can I manage my way in based off of how we manipulate and what we do or don't do based off of the open. And then the next hourly close at 10 o'clock, the hour opens at 10, the 4 hour closes, and the 4 hour opens at 10, right? With all those things that we've put together and all the years of experience we have trading in Q, this was a perfectly catchable trade. You could have got it on an almost 5 minute bullish engulfing, this 5 minute inverse fair value gap over here. You've got your market structure shift breaker, fair value gap, the whole nine. Your draw on liquidity was just the day's high. There were options.
I don't see why you. I mean, I get it. It's not doing what we want it to do, but I don't see why you hate the 6E trade. Like,
It's not as probabilistic, I don't think.
I
You also
yeah.
had.
I don't actually.
I think the problem with NQ is you're right. Like maybe we should have been paying more careful attention to it, but like the amount of run that you had already seen, it's like okay. So, but 6E gave us a pretty strong pullback into a whole bunch of structure.
If you give it an hour or
Well, we have to.
and it ends up running just like NQ did, you're not going to be saying that. Like there's
I absolutely will. That's not true at all.
I don't know. There's no reason it can't do exactly what NQ did, coming out of a daily fair value gap, coming out of a 4-hour fair value gap. You're right. It's currently consolidating, but you didn't know that it was going to be sitting here for 20, 30 minutes, and it could still take off at any point.
Absolutely, it could. And there's no problem with any of that at all. But to expect, as I wanted this trade to pan out, right? I wanted this to end up being a bullish engulfing day. That is out of the picture and is absolutely not going to happen. The 8-hour doesn't look really great. Like pending someone drops Trump drops the craziest tweet ever, or Powell says something in an interview that is super bullish for the euro or bearish for the dollar for whatever reason. There's absolutely no way. If you draw this out from currently where we are to the high, today's high, you're looking at a 1.23% move in the euro. That's just not going to happen today, right? But if we're just looking for equilibrium of this bearish range that we just created, then you're only expecting a 0.2% move in the euro. And that's realistic, right? We could be out before we even retrace to 50% of this bearish price leg, which is the goal. We're effectively saying, like, we don't know that it's going to fully roll over here and go attack the high or go attack this high, but we can reasonably expect, with all the movement bearish that we've put in, we can reasonably expect there might be some kind of a retrace before further continuation to the downside. And what we're doing here is trying to catch the reversal, catch a little bit of that retrace, make our money for the day, and get out, right? But NQ was straightforward. NQ is, this is absolutely bullish. It's going to be bullish. It is bullish, and it will continue to be, right? And it didn't have as steep of a retrace. And you also had, if you flip to ES,
because here's what I'm trying to figure out, and this is something that we've, I think, danced around or been working around for weeks, right? Identification of the right pair to trade, right? Like flipping back and forth. We're trying to wrap our heads around this, which I think is the right thing to do. But like NQ had just absolutely rocketed. Then it pulled back, and it's like, okay, are we thinking this is going to rocket again after? And the answer was obviously yes. But it's like, how do we, like, you have a good AMD reversal at 8:30. You have a just break of structure, and this goes back to higher time frame bias is still bullish, but it's like, holy shit. By the time you make that 15-minute off of 9:30, that bearish, by the time you confirm like a change in the state of delivery at 9:45, you've got a massive stop on that thing. So it's like, is it catchable? I don't know. It seemed aggressive at the time. Well, that's what I think.
I took it twice, and I stopped taking it because of my rule. Yeah, like anyway.
So, what's your question, Sarah? Like, I'm just not sure. I don't know, man. That one kind of lost me.
I think it's definitely, it was definitely catchable, I think. But water under the bridge, right? We didn't catch it, so. Another thing you had going for you is mark out your Asia and London low on ES.
Sarah's trying to make a point.
I think looking at NQ and EU hindsight isn't fair. I don't think NQ was like absolutely had to go bullish again. I obviously thought it would because I took the trade twice, but it didn't have to. And I think all of the internal structure with the dailies and the 4 hours on E6 makes it a more makes it a more likely trade. It's just stuck right now, but you didn't know it was gonna camp here until it did.
Yeah, but the idea that I'm looking at this in hindsight isn't true either. I'm looking at it in hindsight now, but I did also call it in the moment too. So it's like, it's hindsight now, but it wasn't in the moment. We're still in a fine trade. This is still a great trade. I'm not whining about this trade that we're currently in. If I didn't like the trade we were currently in, I wouldn't be in it. In fact, if I didn't like the trade we're in, I wouldn't have doubled down from 3 contracts to 6.
Yeah.
All I'm saying is NQ was certainly catchable, and so was ES, especially when you consider ES doing the dirty work of sweeping London and Asia, and you see NQ put in this massive 15-minute swing failure pattern, which also happened to be right when we closed up the hour, which happened to be right when we put in this massive swing failure pattern on the hour and respected both of these 1-hour imbalances, right? I'm just simply making the argument that this could have been a very catchable move for us.
Yeah.
I like the trade we're in, no problems at all, but this was also catchable and maybe even slightly more high probability. Maybe. That part is certainly debatable, right? Because you're chasing back to all-time highs, and that sucks to do, in my opinion.
So Sarah's question though,
Could have gone both.
and this is a good
100%.
question. Think about this too. Why aren't we trading both? Like when we start talking about reduction of like mitigating position, right? Why aren't we trading both? Like I have my answer. I'm curious as to what yours is.
I'm more than happy to trade both, but you just said, well, there's a couple different things you have to consider. That's not just a black and white answer that is super easy to give, right? But what I would say is we've been working to trade the higher probability pair, whatever that is. So that's one answer. And the other answer is how much risk. Geez, man, can I pronunciate today?
Table.
How much risk are you willing to have on the table at a given time? For me, I'm more than I don't care taking $50, $60 clips on EU. I don't care taking $50, $60 clips on ES. And I don't care if you added them together that I would be down $100 and something dollars. Like, don't care about really any of that. I'm more than happy to get both of them on, but I don't think we're there yet. Like, we're just now starting to really piece together this beautiful process that we've put years into at this point. And we're just now starting to really find some life in just executing one pair and trying to manage that position. Because in the grand scheme of things, you and I, once we get into a trade, now more than ever, we're managing in the trade. We're adding, we're moving stops, we're doing things like that. And it used to be, I'm in and it's either going where I want it or it's going where I don't want it. I'm not adding in, I'm not subtracting, I'm not moving stops, I'm not going break even. It either is going to do what I want or I'm going to get stopped out. And now we make many more decisions than we used to inside of the same execution. So I think we're just working to refine our current executions and throwing 2 executions in at once.
Yeah.
And trying to manage add-ins and moving stops and all of that. Like,
it's a lot. Yeah, that's my answer as well.
It could be difficult. I think we can do it for sure. We can do it. But if we're not sitting here actively communicating, it could definitely be difficult, right? To flip back and forth, you know, because I was sitting there about to pull in Q and you said, I really like 6E. And I was like, oh, well, then I'll flip over to 6E and execute with him. Like I had it marked up Jesse even said, "Did you actually take that NQ trade you had marked up?" And I said, "No, because we're in 6E."
Yeah.
And I like this trade. I come to like this trade more and more as the minutes go by, actually.
That's why when you guys pulled it, I was like, I hope that it ends up doing exactly what NQ did. It's just going at a slower pace.
Honestly, I've found that currency just in general goes at a slower pace inside of these executions. It's not as violent as NQ at all. I wish it was, but it's not. I think our average trade time when we're trading 6E, our average 5-minute execution compared to our average 5-minute execution on NQ, those trade times are going to be super different because 6E is just such a slower grind and takes forever to do anything, really.
Compare the nation's currencies. It takes time.
You're not wrong.
100%.
You think about what does it take to move a pipette? Pretty significant.
Probably more money than I've ever touched in my life to move a pipette. I like this though. I wish we would have left a 5-minute fair value gap. Unfortunately, I wish this 5-minute or 15-minute would leave us confirm a market structure shift at least. Maybe confirm this inverse fair value gap. Something. I think I've got $80 on the table right now. Just looking for 160. If we weren't on futures accounts, though, I think it could potentially be reasonable. Like, if you expected that this daily chart here is going to leave a very, very, very long wick, and that tomorrow is going to take today's high and then continue further, right?
Yeah.
And then give us a strong close on the week. If that's what you think is going to happen, the execution that we currently have right now could definitely, like, this 1 hour prints an inverse fair value gap, and suddenly you've got a bullish fair value gap too, and you can create some structure on the hourly. If we were on Forex firms, this could wind up being an insane risk to reward swing
I
trade.
agree.
Sam, where do you think this is going? Because I told him, I was like, I don't know that you're gonna make a bullish engulfing on the day. Like that seems like a lot to ask. And he's
Not
like, well,
anymore.
maybe just New York Open. Like that's a pretty decent trade.
Where's New
Or
York open?
maybe a little hammer.
I'm looking for 1855.
Yeah, basically the top of that hourly, the bottom of that hourly fair value gap.
I drew a fib from 5:30 to 9:30, and my take profit is just beneath equilibrium of this 15-minute range. But nothing says this has to retrace all the way back to equilibrium. Probabilistically, I think it should.
Good. It just took all of those higher time frame key levels. Like it should have some strength.
Yeah.
That's certainly a confluence. Is just considering this massive move down that started yesterday at 2:30 in the afternoon for FOMC.
Yeah.
Just a little retrace, and we'll be out with a small amount of coin, smile on our faces, and I would go touch grass. I would really prefer to get out of this and go touch some grass.
Go throw some plastic discs around.
Exactly. That's exactly what I want to go do right now.
Yeah, I got some work done. I requested a distribution to actually give myself some money to live and
Love it.
change my mortgage payment frequency.
Yeah.
Yeah. I was paying it every 2 weeks, which basically cuts a whole bunch of time off. But now it's like, why do I want to pay off my mortgage? It's like, there's no point ever.
True.
Free money, more or less.
I wish we had our yesterday's conversation live. It was a good conversation about gold, the devaluing of the dollar, etc. Moved stops to previous hours low. Doubled down on a 5-minute inverse fair value gap. Move stops to previous hours low. $80 risk on the
And his
table
56 says you need
Looking
to play both directions.
to our
This is why I love this man.
boom. There we go.
He hasn't said anything I don't agree with.
Kyle, have anything good to say? Other than I'm done.
No. I will say he was talking a little bit about managing into the calendar. Now that I liked, because it's like he took his trade, and this is something that I'd like to get to, not today, not tomorrow, but like that he's setting up trades basically at the open of the day, right? And I know we've talked about it, but man, alive, catching these euro moves, these Asia moves, where a lot of the movement is happening, basically just playing a simple power of 3 on the day. It's like, yeah, I'd like to get there eventually, because I think that's a decent way to play, obviously. But he was talking about managing around the news events, and FOMC hits, it does what it does, and then next thing you know, you got an 8:30 data release. He wants to be out of it, right? It's fairly straightforward, but that I want to think about more, you know.
Yeah. We will think about it more when we have got some nice big payouts that we want to reinvest into Forex firms.
That I agree with.
Until then, I will never, emphasis on never, ever hold an overnight position on a futures trade ever. Never, ever, ever again. If I could go back in time and take back all those losses that we took taking overnight trades, I'd probably be making payouts right now. Because it was a lot.
Yeah, but I don't
regret doing it.
I don't know why you would make that like a definitive absolute, right? Just to say we're never going to do it again. It's like
I didn't say that. I said
just did.
I'll never do it again on futures firms.
Yeah, but I don't even understand why that. Like, okay, if you want to wait for personal, fine. I don't want to do this on Apex, fine. But say, I don't know, never on futures firms? Why? Why?
I'm not interested. I am an intraday trader. That is where I live and die and make my income. Currently. Or try to.
Trying to, yeah.
I like your.
I'm liking EU more.
I'll ask you this. Do you have the data that would back up us having the ability to swing trade right now? Absolutely not.
No.
We just have to go out there and get it.
No, we don't. But it's something that I want to start. Like I want to keep watching
Yep.
because I mean, like again, it eventually expands our options, especially when a lot of the market conditions have been happening overnight. And if we have the drawdown available to set a 1 hour stop, a 4 hour stop, why not? Right now we don't, and that's okay.
My answer would really just be I like to intraday trade. Spent a lot of years and time learning how to trade this 5 and 15 and 1 minute chart. But when we can swing trade and not have to mitigate at 4:10 p.m. or 4:05 p.m., I forget which one it is, but you can't even hold until 5.
Yeah.
You get automatically taken out on these prop firms at either 4:05 p.m. or 4:10 p.m. And then price moves for another 50 minutes until the market closes at 5. Then it closes for an hour, and you have to be sat there at 6 o'clock, hoping that during that hour we didn't gap up or gap down, and that you can still get a reasonable fill. And so
Okay.
until I have the ability to not have to do that and go through that headache, it doesn't make any sense yet. But once I can hold through all that BS and never affect any of my fills, never give myself an opportunity to make an execution error in mitigating my position and then entering a new one and setting all new stops and getting my 9 accounts into that trade, right? Until I can just do it in one place on a Forex firm and I don't have to change the position, it doesn't make sense right now. What I don't hate, though, is throwing some of them in the journal. Like if you thought yesterday's move overnight was catchable, how? So let's say Samwise the Brave was sitting at the charts at 6 p.m. yesterday at 1800. What would you have been looking for?
Well,
And you fortunately have Kyle who just talked about it, but what do you think?
well, I'm looking at that setup, right? And this is what I'm trying to understand. He took that thing and he posted it at 6:47 p.m.
I
Right?
think he
So
was in it earlier, but yeah.
Yeah. Well, he posted it.
Yep.
He got in on the daily, basically, when that thing opened up. You hit 6 p.m. You hit 6:30 p.m. And this thing just immediately rejects at 7, right? And as soon as you get bullish movement on that 7 o'clock, your opportunity is okay. We're going to continue. We had a strong bullish close yesterday, and we expect to continue today. That's wrong. Like I like the simplicity of it. I'm not saying right now, but like yesterday's daily candle power of 3, we dropped down FOMC, we jam right back up, and we're basically expecting a continuation out of that internal external as the draw. Like kind of simple.
I would have had no problem with this one right here. You have a fair value gap on the 1 hour chart here at 1800. You put in candle 3 at 1900, at 20 at 8 p.m. Asia.
Mm-hmm.
You get an immediate manipulation down into that 1 hour fair value gap. You can enter inside of that, put your stop at the low of the 1800 candle number 2 and the 3 that made the fair value gap. And very simply, you could have your take profit at just 2R, and your take profit would have been clipped during London session between 4 and 5 a.m. this morning. Easy peasy, no problem. You could have even missed the first opportunity and caught another 1 hour execution, maybe even an add in and a stop move at 2 p.m. based off of that swing failure pattern inside of those bullish fair value gaps after the break of structure.
AM, you mean?
AM, sorry.
Yeah. All good. I'm simply stating, like, look, longer term, I'd like to have both tools in the bag.
1,000,000%.
That's all I'm saying. What were you saying, Sarah?
What's your
Holy
take profit?
this. What's your current take profit, Carter, for 60? What are you looking at?
Money. Here you go. 18550.
How high?
Yes.
Yeah, actually, I didn't do that intentionally, but yeah, that's exactly where it is. Yeah. That was extremely unintentional. That's just where my 2R is. And going back to the conversation we just had of what can you reasonably expect out of today? My answer is not much more than what you're currently looking at. And so I just want to get my 2R and go throw plastic around an empty field.
Well, it is, but also it's really just right back to the median of the day.
Well, if it going back to them, often will go higher.
I agree. I'm gonna trail, Sarah. "38 minutes. I pull this thing to the bottom.
Bottom of what?
The hourly.
Why?
It's-
Why not? I have zero risk on the table for it. I just let it play, let it do its thing.
Yeah.
That be for you 118.
That makes me feel well.
Don't do it if you don't want to do it. I like the 2R, but I only have 2 cons on.
Oh.
Sam, where are you putting your stop?
Theoretically, I'll put it at 1830, bottom of the hourly, because this goes back to, I keep saying this, I'd like to see a swing low put in.
Well, how do you not count the lovely swing low down at 1808? That's your swing low.
I'd like to have a higher swing low.
Well, everyone would like that.
Yeah.
Everyone's long. I mean, you've got plenty on lower time frames.
I know, but those end up being, I think, targets to sweep liquidity.
Well, what time frame do you like to see them on?
I'd love to see it on the hourly, but we'll see.
What's your 1R right now?
What's my 1R right now? I think you got a better position.
No. That's not what I mean. Not in this trade. In general, if I said, hey, man, if you're getting in a trade risking 1R right now, what's the dollar amount?
$100.
$100? Okay.
Yeah. I said that weeks ago.
Well, I'm just making sure. I mean, forgive me, but you did just say you're in 2 contracts. So my math would said never once did you get up to $100, right?
No, I didn't.
And neither did I. But I'm just asking.
Yeah, no, that's good. It's fine. That's something that I've been thinking about too. There's just so many things that just keep flowing through the brain. Like, okay, 1R is for me $100, but I'm also on 5 of 6 of my accounts in drawdown. So it's like I got nothing but time on my side in a way, right? Like, I would like to get into at least profit before I start pushing. I need to get.
Do you think $100 position is considered pushing?
It is when I'm in drawdown, I think.
Outside of drawdown.
Outside of drawdown, no. I think that's.
I don't think so either. Yeah.
Like, as soon as I
go ahead
back to whole, I need to start getting $100 on the table.
Starter.
Yeah.
Yeah, I agree. Yeah.
Otherwise, I'm just pissing around.
Yeah, we just got to win a few more trades. I mean, we're in the middle of look, this is what's really cool to me, right? We took a small loss on Monday, trying to take an EU long. That move didn't deliver, but we got back out there with heart and passion on Tuesday, took the same exact trade we tried to take on Monday, long EU continuation, blah, 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 blah. And we end up clipping it for 4.43R. Yesterday, we didn't trade in the morning as we planned not to. And we planned to be very picky in the afternoon and managed to not take any trades and also not take anyone else's trades. We didn't like it. We said, no, not it. And then flip around to today. And now we're doing what we're doing, right? All things considered, this is one of the better managed weeks we've put in a while.
Second card. This is Sam. I'm just fine. How are you doing today, Bill? That makes sense.
Catch.
Sam, oh Sam, oh Sam, my good friend Sam.
See, guys, I believed in it.
Yeah, I like this trade.
I still think, I mean, who knows? You could be right. It could quit, but I think it has just as much going power as NQ did. Maybe more.
Let's post it. New chat. Oh no, not new chat. The number.
My you know how I reached out about the serving bartending opportunity? Have I filled you in on that?
Yeah.
My buddy reached out to the hiring firing guy
Uh-huh.
and said, "Hey man, I know a guy if you need one." And he said,
He said
"We
yes.
absolutely need one. Have him come in at his earliest convenience and we'll talk availability and interviews."
Excellent.
And then my buddy said, they open at 4 p.m. Their hours are 4 to 10 p.m. effectively every single day, except I believe Saturday they do brunch. He said, let me speak with the hiring firing guy and see if he'll be here between 3 and 4 p.m. either today or tomorrow. So I should get an opportunity to go in there and have a conversation and see what we can make happen, huh?
Yep, that's awesome.
Got me smiling, man. What did Sarah say?
Did you hear back from the other interview?
No. Not yet. But I did follow up. Let me make sure I speak correctly. I followed up on Tuesday. Tuesday at like 2 p.m. or something like that. So I don't know. We'll see.
It's, well,
What about the financial position? You hear anything on that?
That's what I'm referring to.
Oh, sorry. I thought you were talking about the other bartending job. I'm sorry.
No.
I hate you both.
yeah, 30, making a nice wick.
Okay. I'm gonna wrap up here soon. And then go throw plastic around a field probably. And wait
go.
for
But you're in the money. You don't want to
Woods.
watch your profit.
to tell me if I need to go talk to him
I'm
today or
going this trip.
tomorrow.
I didn't get to take
And
it.
obviously whichever day it is, I'm gonna go. Right? I love you. Drive safe.
All right. I'm gonna hop off. Got some other stuff to
Boo.
work on.
Hang on one sec.
What am I gonna do about it? It's just moving. Yada yada. Yay! It's moving. $24. No,
Let's wrap up this stream then.
actually.
I've been live for 2 hours, 53 minutes, and 59 seconds. Well, I don't think there's anyone here, but a wise man once said you should always act as though there are thousands of people watching.
Right.
But that'll do it for me. September 18th, it's 11:32 a.m. We've been live for almost 3 hours. Caught this EU live. Had a chance at NQ, didn't like it. Could get crazy risk to reward on this EU. You watched me and Samwise the Brave cover it live.
Could be my tag, I guess.
And we really couldn't have done it any better. If you tuned into this, thank you so much. And we will see you guys next time.